Anything. Oh, there we are. Hey, welcome to Bourbon with Bob. You know, I haven't leaned into this yet, and I'm already messing this thing up. I'm here with Angel's Envy and enjoying myself. I'm here also with Alice Alvey of United Home Mortgage. What ends up on her desk is training and education things. And Ray Snitzevel, CEO of Loan Risk Advisors, compliance attorney extraordinaire, and is well-versed in all the topics we're going to hit today. And here's what we're going to do today in short order. TD got in trouble for some Bank Secrecy Act lapses. And we're not here to pick on TD today. It could have happened to a lot of people. But what we want to do is give you an interesting 30 minutes to maybe help you take some lessons away from this and run your shops better. You know, what can we learn from their mistakes? Real quickly, in my read of the consent order, I see inattention to detail, like they didn't file SARs on time, poor risk assessment and protocols. They had a bunch of ATM withdrawals from countries they don't do business in. Budgetary issues, that might ring a bell with everybody. You're trying to set the right budget for your AML department, and I'm not sure that TD made the best decisions, but we're going to talk about those. Alice has good comments on those. So what we want to do is just leave you at the end of this with a feeling like, hey, that was worthwhile. I'm comforted knowing that other people have the same issues, or I've wrestled with the same kind of thing as I attempt to be a good manager and run my shop. So everybody, welcome. Alice, welcome. Ray, glad you're here. I'm just going to jump right in. Alice, you've read what's going on here. What struck you about what you've read here with TD?
Well, first of all, Bob, thanks for having me on the show. And yes, I have my Basil Hayden over here, and for some future use, and in honor of our Bourbon with Bob moment right now. After working in compliance, for 40 years now, I've seen a lot of things get reported through various consent orders, fraud reports, you name it. And this one is egregious in the way that it comes across in the consent order. And I think the number one thing that started to jump out at me was really just the lapses in, where was internal audit? Where was internal audit in all of this? And especially with something like the cash transactions that weren't getting deposited. Customers were bringing in cash, and those were not getting actually deposited. It was just getting converted into a check for them to take away. So that deposit never made it through the process. So those are two things that started to jump out at me, as well as just the overall kind of, how do you try and navigate all this if I'm a smaller company, right? So they're a big company, should have had the resources, should have made the investment, but that's how, as a smaller company, what are my big takeaways that I know we'll get to as we go on here?
Excellent. Those things jumped out at me too. People brought in cash, and institutions have to file what they call a currency transaction report if it's $10,000 or more. And they filed a bunch of these reports, but left off the name of the guy that deposited the cash. I mean, that seems like an intentional, like too cute by half in filing a currency transaction report. We didn't say who made the deposit. Fertile ground for conversation. Alice, thanks. Ray, what jumped out at you?
Oh, come on. We know TD Bank was railroaded. I'm kidding. To some degree. And by that, I mean, and we've talked about this, we all know this, consent orders don't give us all of the details, all of the facts. Sometimes they get to highlight the elements that the review or the examiner found interesting, but in the real world, sometimes it's hard to address. And I'll be honest with you, looking at the consent order, and a number of things, even if they're half truth, okay, it's hard to say that, TD Bank was fully railroaded. It's not really the case, but we don't know everything about what really happened, when it happened, the decisions that were made. Maybe half of these were bad and the other half were just, at the time, they were good choices, like we all do in risk management. These were choices that we had to make given the time and resources we had at that moment with the knowledge that we had. So, we made a decision, we went with it, and sure, hindsight being 2020, someone comes in and says, that instance, when this transaction happened, you missed it. It's like, I got everything else right. It's very hard to manage that. I'm not saying that again, TD Bank did everything correct here. I don't really know all the facts. We do see what's in here. It's hard to say that a bank doesn't have the resources to handle this, where when you talk to non-bank lenders, which I often do, which are my clients, they don't necessarily have the resources. It's a whole different thing. So my caution here is to look at this, and we see some commonalities in these things about management wasn't made aware. The management was made aware, but didn't make it a priority. The manager of BSA didn't make it a priority. These are all things that we live through daily in risk management, not just AML, BSA, especially in smaller companies. We tend to lose sleep. So all I'm saying is, yeah, there's a lot of things here, but I want to take it with what can we learn from it and how do we apply it. Obviously, I don't want to hammer TD Bank necessarily here, but those are the kind of things that come to mind for me is what really happens.
So in a world of limited resources, we all have limited resources, and our resources might be more limited now than they were 2 years ago. What does good management do? Alice, you've got this responsibility to adhere to BSA and a bunch of other things as well. It's not a facetious question. What do you want in the paper trail? What do you want as evidence of your thinking when an auditor comes in and checks what you've been doing? How do you manage scarce resources to manage well?
Well, at a super small company, if I'm just trying to be the BSA officer and it's me and I have maybe a few other resources around, just make sure that you've got a way people can report it in the first place. That's always the first thing, is make sure you can show from a documentation standpoint that you've given a window or a door for we say partners at Union Home Mortgage, all of our employees are partners, that your partners have a way to report into you. That's step one. Show that there's a way for the information to come to the BSA officer. Then from there, even as a small company, you're collecting it, I'm tracking it, and you can make simple notes that line up with your risk for your company, and as well as line up with what are the circumstances of that case. So just making notes and showing that you have an escalation policy, that you've escalated it properly. There's just some really basic fundamental things you've just got to have that even Excel can manage. Now, when you get as large as a TD Bank, now you've got to have IT people. It's very data driven. You're dealing in large volumes, and that's a very different discussion on how to manage it and what to look for.
There was a thing that was in the order. It struck me as an interesting point, and that was they kind of got busted for hiring people with no anti-money laundering experience to work anti-money laundering. And, everybody works in, an area where they don't have an infinite budget. Can't you bring in somebody that's kind of new and train them up into the position? I mean, we can't be asking every mortgage company in the country to hire an AML expert, right? I mean, this can be trained for.
I think the compliance side, absolutely, right? You've got to have somebody, though, who has some mortgage knowledge, at least in our world, right? So, and then in the banking world, someone with banking experience, so they at least know where to look. You can bring someone up from other areas within the company and train them about the compliance requirements. Really, it's a lot of project management. You need someone who's good at managing all the data that's coming in, able to process that data. And then if they have to subsequently rely on your particular area of expertise, whether it's mortgage or depository, then you're making sure that you've got those resources. So it definitely can be a team effort, but you can train somebody with the right background. And
I agree, Alice. I mean, if we look at, again, I agree, TD Bank is a bank, and it's a different environment sometimes than what I'm present with, which is independent mortgage companies. And if you ask anybody in the mortgage business who's there in sales or production operations, hey, when you came in, did you have operations experience? No, I was the receptionist, but I found it interesting. We all kind of had to train our way through this stuff. I will tell you, I think I'm the only one that I ever heard of. No one actually aspired to be in compliance, for example, right? Everyone kind of, while I was operations, I was burnt out. I was in funding. I was loan officer. Okay, whatever. But I was the only one that really wanted compliance, believe it or not, when I was in law school. So we all kind of have to come from somewhere. I would submit when they talk about the consent order, we don't know the details. But if it were me, if I wanted to hire someone, I don't need the AML experience. I need somebody with QC experience. I need someone who can find that, can find kind of almost the fraud issues or the patterns that might be an issue. That's what I'd be looking for anyway, insofar as substantively. The others, and I want to say it's easy, but filing the SAR and so on and so forth, that's administrative. We can work on that. But having the skill set I don't want AML experience necessarily in a small company. I will take it from anyone in risk management, QC or an underwriter. With Bob, you did fraud as you were, like I said, you were a fraud guy to the stars, right? So, anyone who had fraud experience, that would work. But you can easily tag that as no AML experience. So, especially in a small company where you got 20 people, you're not going to have experience, but you can get it pretty quick. And a lot of people are smart learners, especially
I think you can have a lot of support staff. It's like being a skipper of a boat. You've got to understand the wind and the waves. It's fine. You're the expert in that. You can have people pulling your lines for you and crewing that help you, and they're indispensable, but they don't have to be the expert. I've hired people before in my investigation company that thought either everybody was a crook or everybody was an angel, and neither of those two expressions are true. You do need people. I joke, I say, if you want to learn to fight, take a lesson from the guy with the scar. You've got to have somebody who understands the risks that are faced by loan originators, because we get pushed by those who send us business to do things maybe we don't want to do. But we don't have bags of cash. If we're not a depository, we don't face that kind of thing that TD faced in this case, where somebody's really virtually coming in with bags of cash. That needs to be trained for and can be trained. So you don't need to hire experts. You can bring them along.
I would agree.
Yeah, I agree.
Ray, when from your perspective as an attorney, when you're looking at this stuff, I mean, we say that if it's not written down, it doesn't exist. Alice, you'll back me up on that on an audit. You can't say you trained people. You got to prove that you trained people. If it's not written down, it doesn't exist. Talk a bit about that, Ray, from an attorney's perspective. What do you want to see in writing, and what do you not want to see in writing?
I don't know. That's a trick question. I will never say publicly that I don't want to see things not in writing. That would be a wrong thing to do. I would never say, for example, if you suspect something and it might be internal, blast an email. I would never say don't send that, because that wouldn't be proper for evidentiary purposes. But use common sense. So, but at the end of the day, I do believe that sometimes you have to be discretion is got to be applied, of course. But I'm a strong believer. Otherwise, things need to be documented in your processes. Now, I will say in this order, there were a number of things that were apparently documented, the emails, so on and so forth, about why they didn't get why they didn't. There was evidence they didn't put things in place they were supposed to. For example, technology wasn't working and that took too long, and so on and so forth. So when it comes to the loan level issues, of course, I would like to see things documented, particularly in an AML situation. Well enough, and we keep it confidential. So I used to, as an auditor, and Alice, you might appreciate this. I remember this when I was doing auditing at the loan level. Mind you, this was before technology. So we had, you guys remember the old con log, right? The paper con log, and pretty much the left side of the file.
Yeah.
And I would read that to see what happened. And if, as an auditor, if I had to get up to find out what happened, then you really lost. In other words, the communication wasn't strong enough. Again, you need to be intelligent about what you write, and what you're saying in there. You should represent it well and be brief about it, which not always easy for me. But represent what's going on well enough. Don't overstate it. But I'd like to have it documented in the file in that context. But
I'm gonna translate for the audience that's young enough that they don't understand paper files on the left side of the file.
Right.
I'm gonna translate.
Yeah.
When you're originating a loan and somebody gives you bank statements that show a bunch of NSF charges, those end up on the left side of the file. They stay out of underwriting. We'll verify your assets somewhere else, but we're not giving those to the underwriter. That is classic left side of the file stuff. It's the stuff you weren't crazy that underwriting see.
Right, and fair enough, Bob. Kind of the theme we're saying here. It wasn't as if we destroyed the evidence. It was a matter of we put it somewhere else that we acknowledge it wasn't relevant. That was the intent, right? I mean, people could see it if they want, but it was not the intent. We looked at the right side of the file, which is what really worked work the numbers and so on and so forth. So to answer your question, though, I'm always a believer of we need the documentation, the information. I think you have to practice discretion. What you do put down and how you say it. I do believe things can be misunderstood very easily and put things out of context if you're not careful. So I've seen that happen many times, which is why, as Bob knows, I overwrite things, especially my emails, to make sure, Bob, you understood 3 o'clock Pacific time meaning where I live. I'd be very clear about that he rolls his eyes and he drinks more bourbon, but that's how we do it, Bob.
Well, and as we say, you've got to look at all 8 sides. How many times have you looked at a file and maybe on the surface, the way it was documented looks like, oh, the loan officer is definitely involved in this situation. But the reality is once you start investigating, you find out, okay, no, it wasn't them. It was someone else. It was this other set of circumstances. So it takes time to do that. And you're not going to write everything down that you find out through that investigation. Like you said, Ray, you've got to know that's part of the art of being good at internal audit, being good at documenting what your AML, what your research was to get to, did I have to file a SAR? And that is an art that someone has to be taught.
I once had an instance where I think I wasn't sure if the loan was performing, and the investor bought it back at a client, and they suspected that the borrower doctored up their I think it was a pay stub or something like that. So, okay, did we file the SAR or not? You investigate it. So I actually called the borrower and said, hey, your pay stubs look like they've been doctored up. And she said, well, they are. It's like, oh, crap. There was nothing in, here's the funny thing, there's nothing in the rule book for us, the playbook that says, what do you do when the person admits that it's fraud? Like, I don't know what to do now. It was a weird thing. So we took care of it. We whatever we had to do. But usually it's not that simple. And remember, when it comes to these things, when it comes to certainly SAR filings and SAR investigations, we don't have to conclude it's fraud. It just has to be suspicious enough that we can't connect the dots with adequate due diligence. And so that's the threshold it is. And you guys know that, right? So
let me talk to that briefly. We're talking about TD, a huge multi-billion-dollar company, and there are mortgage lenders that go, I'm a 6-person shop. Does this all apply to me? Well, yeah, it does. Since 2012, all these Bank Secrecy Act rules have applied to you. And I've talked to small brokers who said, really? I mean, I've got to train in this stuff? Yeah, you got to train in this stuff. And it's been the case since 2012. All right. So what does that mean? You've got to appoint somebody inside of your shop, probably the broker of record. I guess if you're a 6-person shop, it's got to be the BSA officer. And you've got to file these suspicious activity reports like you're talking about, Ray, that identify suspicious activity. You don't have to prove it beyond a reasonable doubt. That's not what you're doing. You're alerting FinCEN, the Financial Crimes Enforcement Network. It's a little part of the U.S. Treasury Department. It's several hundred people within U.S. Treasury. You're filing this report that says something stinks. It stinks, and they appreciate, law enforcement, when they look at your SARs, appreciate speculation. I think this guy's involved. I think that guy's involved. It looked like it came through a builder or a realtor or somebody. When I was originating, there was a CPA above a local bar called Silky Sullivan's. And this CPA for $400 would give you tax returns for any year and pay stubs and everything you needed. And every realtor in the area knew for $400 you could get these guys qualified. Well, if you suspect that realtor's involved and that realtor's involved, you can file a SAR that speculates as to all those things, and they're absolutely confidential. You can't get in any trouble for reporting your speculation. And frankly, talking to law enforcement that I've talked to, they appreciate your speculation. This is your expertise. You guys are the experts in mortgage fraud, right, Alice? I mean, they appreciate you and your guidance.
Well, and you want to, well, the whole point is that as an industry, we're in this together to stop mortgage fraud. It costs us a ton of money. You don't want to have loans that end up being a repurchase coming back to you because the agencies have found the fraud, or the correspondent that you sold it to even is saying, hey, this is fraud. You got to buy that back, even if you are a small shop. So, we have to make sure that as an industry, we're sticking together, because these perpetrators hop around. You think they stopped at TD Bank? Well, once TD Bank got busted and all their connections are out, they're looking for another place to go set up shop and do the same thing. So FinCEN is that central point of record for us to stick together and help stop these, any kind of large racketeering that's going on. It's difficult, and it doesn't mean FinCEN's going to do something with it just because you file the SAR. I think that's the other thing that makes BSA officers a little nervous. Oh my gosh, does that mean the police are showing up at their door just because I said so? That's not the way it works. So they will look and compare in their records and make decisions from that point.
Let me make 2 points about SARs. One is they're totally confidential. Don't ever tell the subject of an investigation that you're going to file a SAR. Don't do that. It's just off limits. Don't tell anybody that you're going to file a SAR on their transaction.
Yeah, literally don't even tell your boss, right? Don't tell
limit the conversation. Exactly.
Don't tell anybody.
Limit the conversation. You could be filing a SAR on your top producer. Ouch. You've got to have anonymity when you file these things. And the other thing I want to just address really quickly is when people get familiar with this, they see there's a 30-day filing requirement. And I've got the perfect way to describe to you what your obligation is on that 30 days. Imagine that you are a lifeguard sitting in your tower and you see a fin cutting the water. You're not sure if it's a shark. And so you're going to check this thing out. And if it's a dolphin, you're not going to blow your whistle. If it is a shark, you're going to scream bloody murder and get everybody out of the water. FinCEN says that you have a reasonable amount of time to investigate, is that fin really a shark? Your 30-day filing requirement doesn't start until you've determined that that's actually a shark. Okay, you can see the fin, you got something that worries you, you started your investigation. But Lord knows you don't want to be blowing your whistle all day long and scaring the bejesus out of everybody on the beach. You don't blow your whistle until you're sure it's a shark. And that same rule applies to SAR filings. You've got a reasonable amount of time to investigate to see that somebody really does need to get reported. It does not start on the day that your QC department says, hey, we found something fishy here. So,
well, and that's a great example of what to put in that communication log, or what do I write down and document? Just document, the specific dates that you were doing different investigative work or research. And then that helps show why, whenever you came to that conclusion, okay, it's a shark, it's not a kid with a fin toy, I need to report.
That's exactly right. And it's important that you write down those protocols. Think through it. What are you going to do to investigate if you've got suspicious activity? We're gonna send out all the reverifs. We're gonna maybe interview a closing agent, or we're gonna interview a borrower. Write out what your protocols are and follow those protocols, and you're going to be backed up. You shouldn't get in any trouble if you follow those protocols before you actually file the SAR. TD got in trouble. They had something in the hundreds, $500 million worth of SARs that they hadn't filed. Don't quote me on that, but it's a big number. They just got way, way behind, both on subpoenas and SAR reports. And that just shows lack of attention, lack of diligence. And it's kind of, you guys tell me if your read was the same. It was almost like if TD had showed they cared, they could have gotten a pass, but there was so much in their actions that showed this just isn't really important to us. Do you guys, was your read the same way in this consent order?
I did see that. I mean, there were a number of things, again, as written and as perceived, and given the facts and circumstances in the consent order only, that, yeah, I mean, it echoes the same concerns we typically have in compliance anyway. So this is, by the way, this is just not an exercise in AML BSA. This is an exercise in compliance management overall. But that is that, they escalated information, and it seemed like leadership didn't seem to care too much or put the resources behind it. They didn't put literally the headcount, the human resources behind it to fix issues, to timely file SARs and so on and so forth. So that seems what was a common issue and a theme. And I submit, probably documented as well, that was in fact the case. So I can understand where it doesn't paint a good picture of whether they were not caring. It didn't seem like it, but I will tell you at the same time, and again, I can't make it for the argument for TD Bank, given the size and the resources they had. But AML, BSA, and a number of compliance things, especially when you're talking about management, not in risk management. So, leadership, sales leadership, company leadership entirely. The compliance can be kind of an investment without a lot of satisfaction. At least you believe in what you're doing, but compliance is best, and AML, I would say, is the same thing. Is probably best when nothing happens. So like a refrigerator, nobody cares until the refrigerator goes out, and then everybody knows this. This is exactly what happened, right? AML was fine until the refrigerator died, and suddenly, why does the refrigerator not work? And in this case, AML is not working. So sometimes it's hard for leadership to get on board on things. Again, I'm not making excuses for TD Bank, but these are real things in a mortgage company, smaller companies that we deal with, where management is, I'm spending all the resources, I'm sending things to FinCEN, and nothing's happening. There's no big fraud investigation, et cetera. Does it really matter? And I think its form over substance is the perception. I'm not saying actually, but I can see where leadership sees that it's form over substance. And so it's hard to show that you care, right? It's hard to say,
so in our like 5 minutes left, you two have a wealth of experience in this. Give our listeners, let's just say if you have a shop with fewer than 40 employees, you're a small shop, limited universe, limited assets, you're doing fine, but you're not TD Bank. Give some advice. If you're running a small shop, how do you stay out of trouble? How do you manage this BSA duty response? And basically look good when the auditor knocks on your door. They may have a thing or two to talk to you about, but basically you're a fine corporate citizen. Alice, give some advice.
All right. Well, I'm going to start with you have the whole circle, right? I mentioned this a little earlier. You have a policy and a procedure written on how it's supposed to work. It doesn't have to be complicated, but you've got some kind of guidebook that you can share and show, all right, here's our first good intention. We wrote it down, but you have to be executing exactly to what you have in writing. One of the biggest mistakes companies make is that I'm not doing what I had in writing. So I would say one of the number one things is make sure you have those aligned. And like I said earlier, make sure you have a way of receiving those reports, and you realize this is part of your margin. This is going to eat at your margin. You have to account for this in your P&L. I use the term people want to get big, like they want to be a lender, but they don't want to grow up. So you have to do both, right? If you want to be big, you got to grow up. And this is an aspect of it. They go, oh, nobody reads that document anyway. You know what? The person I care about who is going to read it is that auditor. Exactly. So I'm going to make sure I've got something in writing. There's lots of ways to get that easy without making it crazy, but you got to grow up and you got to realize this is going to be part of your overhead to have someone who pays attention to this and regulatory compliance as a whole. You guys know that. That's the thing. Put it in the budget, make sure and then run your shop accordingly, and make sure they have a seat at the table. This person needs a seat at the table, at the big table.
Very good point.
Excellent.
So the way I see it is, in a smaller shop, TD Bank had resources. I don't know what, I can't answer for them, but when you're a smaller company, we have to start doing triage insofar as what we focus on. So I like to consider something. My approach is always the 45-second speech, right? I can identify 200 points of risk, my TRID disclosures, my RESPA disclosures, rescission, whether I'm doing HMDA correctly, so on and so forth, right? We've got all of that. Start being prepared to get your 45-second speech about what's going on with each of them and what you're trying to do to address them. You don't have to solve everything, just that you've noticed it and addressed it. And then you start looking, do kind of an assessment of what's really an issue here, within a company. And I get this all the time. Someone will come in and say, we don't know what we don't know. And I start going down the list and really assess the top priorities. And for me, a top priority, this is how I prioritize. The first thing is consumer harm. Are you doing something that has actual consumer harm? Not getting the disclosures, whatever it is, right? The second one is, are you doing something where you can't sell your loans? So maybe not consumer harm, but you can't sell your loan. That's a risk as well, right? And then ultimately you go down the line as to whether it's a consent order that you might be subject to if you don't get this right. And you finally get down to a point based on experience, this one's not that important. And I say that not that certain risk is never important. What I'm saying is I got 5 resources and 1,000 issues. I got to deploy them correctly. Prioritize correctly. I think that's what's important. When it comes to AML BSA, I think the biggest gap I see is we can put and Alice, you make a good point. I think the policies, procedures are exactly what you have to put in place, but we have to let people know that it exists. And what I would find is if I walk into a shop and ask a loan officer or an underwriter, hey, when you see suspicious activity or some kind of fraud, what do you do? Oh, I don't know. Well, okay, if the frontline people don't know how to escalate, you've already lost the argument. Your 45-second speech is tanked. So make sure the simple things of, do these people know who they have to email when they see something?
Red flags at mycompanyname.com, right? Just set up an email. I don't have to remember.
Exactly. Set up an email and let them know they're supposed to email. That's what we want. So again, it's put at least the rudimentary things in place, and the detail will work itself out as a practical matter. That's what I believe.
Very, very important. Great last point, Ray. There's a matter that we've followed. We all know about it. There was a bigwig with the MBA who decided that he was going to break bad when he was in his 60s and wired a bunch of money to himself and ended up with a 20-year sentence. And it struck me at the time when he did that, which lower level employee would have had the brass cojones to tell the boss, I'm not wiring that money for you. Basically, what he did was he took escrow accounts and wired them to a builder. He was getting his custom home built, and he was dipping into people's payments and wiring that. If you don't have protocols in place that stop even the bigwigs from doing that kind of thing, there's no frontline person. There's no person who's been with you for 3 months and he's, a young junior employee that's going to tell the boss, I'm not going to wire those funds. You have to think about and put into place all of the P&Ps that are necessary to run a good organization. And unfortunately, that involves that uncomfortable conversation. How do we stop the chief from behaving badly?
Yep.
That's got to be part of your P&Ps. It's just a weird question to ask. But in this particular case, this executive is going to spend his twilight years behind bars in orange, and it's just not my color. So I can't do that.
Well, everyone needs a CCO, a chief courage officer, someone who has the courage to say this isn't right and we got to do something about it.
It's a good position. I wish it existed, Raymond.
Yeah, right. Exactly.
Alice, Ray, you guys with your wealth of experience, I think have just added so much to this conversation. I think everybody who listened to this today got something out of it. Hopefully it gives them comfort as they are running their own organizations, that they're doing it well, asking the right questions and documenting the right things. So thank you guys both for participating. Look forward to doing more.
Thank you, Bob.
Thank you, Bob.
Thanks, guys.